So is a big rate cut and a middle-class tax cut what's needed to keep this economy moving forward? Let's bring in former Dallas Federal Reserve Advisor Danielle DiMartino Booth and market watchers Scott Martin and Lee Munson. Great to see everybody this morning. Danielle, let me kick it off with you. Your reaction to a full cut by the Federal Reserve and potentially a cut in payroll taxes.
Well, it looks like the president is hoping that the country can go out there double-barreled and answer what the European Central Bank, what the Europeans have been promised, which is basically rate cuts and quantitative easing. He wants to put some fiscal stimulus on top of that really targets the middle class, and then capital gains tax cuts as well to hold the stock market together. So it really does seem like a perfect Goldilocks scenario if he was able to wave a magic wand and make this happen overnight. I don't know how willing Jay Powell and his peers are going to be to launch such, that type of a shock and awe campaign that was really emblematic of some of the crisis years when the economy was truly in much more than a recession.
Yeah, Scott Martin, how do you see it?
Well, it's funny. I mean, talking about '07, I remember that fall very well. I got married that fall, and other than that event, it was a really bad fall because, to Daniel's point, the Fed was cutting rates faster than we could even see them being cut, and it didn't help. We went into a major financial crisis, and that's what I think worries me here with the Fed on the other side now, as the president has pointed out, is that they raised too fast. I think they've been too hawkish. Even when we got the cut recently at the end of July, Maria, Powell says, well, this is a mid-cycle adjustment. Don't get used to this. We're not going to be this nice. So it still to me boggles my mind that you have the 30-year government bond, my friends, a skosh over 2%, the Fed funds overnight target rate at 2.25%. That tells you it's too high. Yeah. They need to listen to the markets, not the president, and cut some more.
Yeah, look at the 10-year where that is. I mean, it's just extraordinary what we're looking at here, Lee Munson. Your reaction? Do you want to see a cut?
I want to see a cut, and I'll tell you why. I mean, if you ask a lot of bond traders right now, they already think that we're going to see 3 cuts, maybe 75 basis points before the end of the year. So the president's not that far off. Number 2, I think this is going to be something that's going to help farmers. I mean, I'm in New Mexico. You go down to southern New Mexico and you see land fallow right now. It's going to help drillers in the energy sector that are, over leveraged and can use it. And you also got to look at local regional banks. They need this right now. What people don't understand, Maria, is that we have with China intertwined trade and national security issues. I do a lot of business with people in national defense. We've got to deal with this Chinese thing. And the president says he'll push this economy into recession to deal with that. Unlike the Russians, unlike the Soviets, money talks with China. And so I think that we're going to have to guns and butter approach. We got to juice this system for the next 12 months so that Trump can get these issues with China worked out. Again, I'm fiscally conservative, but we've got to address the intellectual property, thievery, the military espionage, Huawei, all that stuff. So
all the things they won't agree on.
Push through a difficult time.
Exactly. These are all the things that they reneged on. So, and by the way, let's not forget that China has broken its promises so many times in so many different situations, whether it's the WTO or breaking promises with Hong Kong. Look at the 2 million people in the streets as we speak, breaking promises with the U.S., saying that they're going to buy beef and then they don't. So even if we were to see a deal, will it be enforceable?
Well, I think that, Maria, that's a fantastic question because we've seen them renege and go back on their word time and again. We've seen the way that they're treating the people in Hong Kong. They're simply not a trustworthy negotiating partner, and I think that there's every reason to question the integrity of China's intentions at this juncture. What I'm not sure about is whether or not tariffs are the correct instrument anymore, and I think that President Trump has seen that, and he pulled back on those September the 1st increased tariffs for that very reason, and now he's looking for a different way to go about providing relief to this economy so that it can get through, so that his administration can get through these very tough negotiations.
Yeah, I mean, the issue is that the economy feels good, but at the end of the day, we are seeing a bit of a slowdown. We know that Europe is having a hard time generating any growth. So what about that, Scott? Do you feel that things are poised to slow down considerably by year end?
I don't know about considerably. I think the slowdown's already begun. I mean, I think you mentioned it. It's overseas. It's definitely in the U.S. The housing market, I know home builder sentiment's good, but housing prices, from my eye, in certain areas that have been good, have slowed down.
Yeah.
Home buyer sentiment's kind of cooled off. We've seen business sentiment waver a bit. Consumer sentiment recently fell off some highs. So I think a slowdown is imminent, if not here already, Maria. But yes, it's not a major slowdown, but one that needs to be helped along a little bit.
Lee Munson, real quick, would you buy into this sell-off or stay on the sidelines here?
buy in the sell-off, buy what's beaten up.
Okay.
We've got 12 more months. And I think the next 6 months, you buy every dip that you have, and then you start getting. But between now and the end of the year, I think you have to be bold, and then I start to get more panicky and freaked
All right.
out.
Thank you so much to the panel.
Yeah.
Great conversation there. History says if the economy is good, there is a good chance that the incumbent president gets 4 more years. So do some new economic jitters have the White House feeling jittery itself?